From an investor perspective, it means a lot more production, a lot more signal that there's good demand out there for multiple years. And the government support could mean that we're going to have lower cost manufacturing available to those companies.
What is up, guys? Welcome back to the channel. The US government wants to fight semiconductor shortage, with Biden calling for new funding. Among other measures, the White House budget request includes $150 million to fund 2 manufacturing programs, including one targeting domestic semiconductor manufacturing. This is the latest effort from the White House to address the ongoing semiconductor shortage, which has stalled supply for consumer items like the PlayStation 5 and halted production at Ford assembly lines. Joanne Feeney, a partner and portfolio manager at Advisors Capital Management, went on CNBC to discuss how investors can approach the sector. This is what she had to say.
It's a really strong sign that we're likely to see more production in the US with subsidies, which drops right down to the bottom line for these manufacturers. So they incentivize another plant by Taiwan Semi or by Intel, or any of the others. Infineon is located in this country, right? We're likely to see that really drop to the bottom line and boost their profit margins. And the reason why the government involvement is so important here is because those chip fabs, right, those companies want to run capacity utilization as high as they can. They don't want to have unutilized equipment on their floor, right? That's just depreciation costs. And so to get them to build extra capacity, right, is really costly for them. And so you need the government to get involved to help subsidize that building of extra capacity. From an investor perspective, it means a lot more production, a lot more signal that there's good demand out there for multiple years. And so you can look at a Taiwan Semi as an opportunity here, but also look at the designers that are using those manufacturing plants, whether it's a Qualcomm, an NXP, a Broadcom. These are all companies that are seeing demand drivers that are likely to last for multiple years. That's what this shortage is telling us. And the government support could mean that we're going to have lower cost manufacturing available to those companies.
So for the comparison today, we have 3 large semiconductor companies. These are Intel, ticker symbol INTC, Broadcom, AVGO, and Micron Technology, ticker MU. In order to make the comparison possible, we will be looking at 8 different factors: analysts' price targets, forward price-to-earnings ratio, annual revenue growth, price-to-sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and the dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end, the stock with the most points will be considered the winner of this comparison. I hope that the rules are clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average, we will consider the stock as undervalued, and in the end, the company with share price is furthest away from the average target to the lower side gets a point for this factor. For Intel, we have 34 price targets of analysts. They range from the lows of $40 to the highs of $86 per share. The average is at $65.57, and the current share price is at $68. So the current share price is around 3.6% over the average target of analysts. For Broadcom, we have 28 price targets of analysts. They range from the lows of $425 to the highs of $580 per share. The average is at $510.96, and the current share price is at $482.02. So there is a 6% room for the current price to reach the average target of analysts. For Micron Technology, we have 32 price targets of analysts. They range from the lows of 39 to the highs of $165 per share. The average is at $113.77, and the current share price is at $95.61. So there is still around 19% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with the highest percentage, Micron Technology gets the first point. Second factor is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. That is the standard price-to-earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price-to-earnings ratio gets a point for this factor. Intel has a forward price-to-earnings of 14.41. Forward price-to-earnings for Broadcom is at 16.64, and Micron has a forward price-to-earnings of 8.84. Forward price-to-earnings ratios are in the table, and with the lowest value, Micron gets another point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for Intel, and in 2018 there was an increase to $70.85 billion US. Then in 2019 there was another increase to $71.97 billion, and into 2020 we again had an increase to $77.87 billion. So with 3 increases in annual revenues, we have a sum of 3. Revenues for Broadcom, and going into 2018 there was an increase to $20.85 billion US. Then into 2019 we again had an increase to $22.6 billion, and into 2020 we had an increase to $23.89 billion. So with 3 increases in annual revenues, we have a sum of 3. Revenues for Micron, and going into 2018 there was an increase to $30.39 billion US. Then into 2019 we had a decrease to $23.4 billion, and going into 2020 there was another decrease to $21.4 billion US. So with 1 increase and 2 decreases in annual revenues, we have a sum of 1. Results for the annual revenue growth factor are in the table, and with a sum of 3, both Intel and Broadcom each gets a point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and with a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. For Intel, the price to sales is at 3.56. Price to sales for Broadcom is at 7.97, and Micron has a price to sales of 4.56. Price to sales ratios are in the table, and with the lowest value, Intel gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Intel, the return on equity is at 26.36%. Return on equity for Broadcom is at 16.36%, and Micron has a return on equity of 8.23%. Return on equity percentages are in the table, and with the highest one, Intel gets the third point. Sixth factor is the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Intel, and Q1 of 2020 beat expectations, Q2 beat, Q3 met expectations, and Q4 beat. So with 3 beats and 1 meet in quarterly earnings, we have a sum of 3.5. Quarterly earnings for Broadcom, and Q2 of 2020 met expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 3 beats and 1 meet in earnings, we have a sum of 3.5. Earnings for Micron Technology, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we have a sum of 4. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 4, Micron gets another point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For Intel, the current ratio is at 1.9 to 1. Current ratio for Broadcom is at 2.14, and Micron has a current ratio of 3.18. Current ratios are in the table, and with the highest result under 3, Broadcom gets another point. Last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield may suggest that the company is sharing profits with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield gets a point for this factor. Intel is currently paying an annual dividend of $1.39 per share, which is a dividend yield of 2.04%. The annual dividend for Broadcom is at $14.40 per share, which is a dividend yield of 2.97%. And Micron Technology is currently not paying any dividend. Dividend yields are in the table, and with the highest percentage, Broadcom gets the third point. We can calculate the results, so Intel has 3 points, Broadcom 3 and Micron Technology also 3. To break this tie, we need to remove a factor that in my opinion is the least important, and that will be the dividend yield. This means that Broadcom loses a point and we now have 3 points for both Intel and Micron Technology. So let's remove Broadcom from the equation and recheck again. For the analyst's price targets factor, the point goes to Micron Technology, forward price to earnings point to Micron, annual revenue growth factor point to Intel, price to sales ratio point goes to Intel again, return on equity point to Intel, last 4 quarterly earnings results point to Micron Technology, for the current ratio between 1.5 and 3 point to Intel, and for the dividend yield the last point goes to Intel again. We can calculate the results, so Intel has 5 points and Micron Technology 3. This means that with a sum of 5, Intel is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you: which semiconductor stocks have you been buying recently? Share your picks in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. Last week I did a comparison on a few heavy construction machinery companies, and we have 33 weeks worth of investing with the Revolut stock portfolio. If you are interested in any of those, then click on a video currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.